I'm Chase Poole.
And I'm Jackie Scholorman with Scholorman Group of Coldwell Banker Realtor. Today I'm with Peter Pham with Guaranteed Rate Mortgage to discuss about what the mortgage insurance is versus auto policy and CLTA policy, and what are the differences between those versus the property insurance, because there's a lot of confusion between buyers when they're considering when we explain this to them.
Absolutely.
Yeah.
So welcome, Peter.
Thank you. Thank you for having me, Jackie, Chase. In purchasing a home, there are really 4 types of insurances that are most common to any transaction. We have title insurance, which usually encompasses the owner's title policy and the lender's title policy. We have mortgage insurance, commonly referred to as PMI, or private mortgage insurance. And that typically is a policy for the lender that covers a buyer who is putting down less than 20%. And then the most common insurance that everybody has to buy is your homeowner's insurance, which is also commonly referred to as hazard or fire insurance.
So what are the differences, and are they required? Are buyers required to have these title insurance and property insurance and
that's a great question.
title insurance?
Which ones are required and when, I guess?
So property insurance, hazard or fire insurance is absolutely required on any property. That insures the property from any kind of fire, flood, any damage that the home could occur. That insures
and liability.
That insures the homeowner. Mortgage insurance is only required for people who put down less than 20%. That ensures the lender that the buyer, the borrower, will not default on the loan, and if they do, the lender will be made whole. Title insurance gets a little more complicated because there are some instances where it's required, and then there are some instances where it's optional. Generally, when you buy a home all cash, title insurance is optional. So when you do have to buy title insurance, there's a difference between an owner's title policy and a lender's title policy. The owner's title policy is going to ensure the title that is free and clear of any encumbrances or liens or problems when a buyer buys a home. So that way, if you buy a home from someone who may have tax liens or private loans that were not disclosed, title insurance should usually search for issues like that and insure the homeowner who's buying the home from any of those encumbrances or liens. Lender's insurance or lender's title is usually purchased in conjunction with someone getting a loan. So that ensures the lender and the specific loan amount that they're borrowing, that if anything happens, generally the lender wants to be in first position as a lien holder, and lender's title insurance is always required for anyone who's getting a loan.
So as far as the auto policy or title policy, how long is it good for? And what about the same thing with the mortgage insurance or even property insurance? How long are they good for?
Time frames are great questions. The owner's title policy is usually good for the life of the time frame that you own that home. So when I buy a home and I buy owner's title policy, that policy will cover me from the time I buy until the time I sell.
Until you sell that, right?
Correct.
Okay.
The lender's title policy is only good for that specific loan. So if I got a loan when I bought the home, but I refinance a year later, I'm now required to buy a new title insurance policy for the lender again because it's a whole new loan.
It's not transferable, right?
And it's not transferable from loan to loan.
Okay.
Mortgage insurance is usually required when you're putting on less than 20%, but there are mechanisms to remove or cancel the mortgage insurance when you have more than 20% equity remaining in your home. Okay. So there are very specific rules around that depending on what type of loan you're getting. So, definitely there is a way to get rid of mortgage insurance once you have enough equity. Fire insurance, hazard insurance, flood insurance are always required 100% anytime you own that home for as long as you own the home.
Well, can you combine these insurances into like one umbrella policy, or let's say bundle policy, I should say? Yeah.
Unfortunately, no. Insurance products are regulated by the commissioner, and the insurance commissioner in the state of California, every business that sells insurance has their own filing requirements, and title insurance actually has to file their amount of title insurance fees with the state for every loan, every situation, and they cannot charge you more than what they filed. There's a regulation on how much they can charge, and that's regulated by the insurance commissioner. It goes the same for mortgage insurance and also fire or homeowners insurance. And because they're so different in each of the areas they're covering, it would be difficult for someone to bundle all of that into one.
Okay, so it sounds like you're going to be dealing with 4 different potentially vendors when acquiring these different insurances that may or may not be required for.
Correct. Typically, owners or title insurance is selected by the buyer. The buyer can choose who they use, and same thing with the hazard homeowners, insurance. Mortgage insurance is usually selected by the lender because they're insuring their own interest. So there are multiple vendors, but the buyer or borrower does select some of those, mainly title insurance and homeowners insurance. But the lender usually is the one that selects the mortgage insurance.
Great to know.
So Peter, I'm sure the viewers are going to have lots of questions with respect to these insurance and anything else in between. What is the best way to get hold of you?
You can certainly call me or email me. I'm with Guaranteed Rate. My phone number, 650-291-5700. And my email address is peter.pham@rate.com.
Well, he's one of the best in our local market. I've known Peter for, I would say, 10 to 15 years now. You've done numerous transactions for me. And every time I refer clients to you, my clients come back with higher praises for your performance and the service that you provided. So thank you, Peter.
Thank you for having me here today, Jackie and Chase. It was wonderful speaking with you.
All right.
Absolutely. Now, if you have any questions about buying or selling in today's market, give myself or Jackie a call here with the Scholman Group, and we'd love to schedule a 15-minute conversation with you to strategize on how you can get